or sell the Airlines ETF. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So here is the Airlines ETF. It is the best performing from the lows here at 27-ish%, but it is still minus 23% away from the 52-week highs. We start here with the chart, weekly data points. We can see that when we go way back here, even to 2016, the green 50-week moving average was a huge deal. Resistance, then it became support, a very viable support. Resistance, so it's a very stable indicator, very tradable. So what is currently the case is that it is functioning very well as a resistance level. So relatively shortable, and we are approaching that resistance level now. Another thing here with this ETF in particular is time cycles. So here are some of the time cycles. You can go long, short, long, short, long, short, long, short, long, and potentially, given the clean nature of these time cycles, there could be some shorting opportunities for this ETF. The time cycles are really clean. They have been different in the past, so time cycles, they can shift, but while they are operational, they are great. Here with these daily data points, we do see that the red 200-day moving average, it is a pretty good short level, and we are testing that level now. So we are at a key resistance level. When we look at these overbought, oversold indicators on the weeklies, RSI is at a level that we failed previously at, vis-a-vis the 50-week moving average. And looking at the daily data points, and given that we are testing the 200-day moving average, and we haven't been able to get overbought on RSI this year at all. The last time we were above 70 on RSI, that was back here in March of 2021. So we are at a level now that is problematic in terms of attracting new buyers. It's a level of risk, of caution. In my notes, I write 200 daily moving average and RSI resistance. I give the bears a -7. That -7 is contingent on the resistance being able to hold. If we were to break out above it, then obviously that would neutralize certainly the daily moving average resistance level. Let's look at the seasonality for the ETF. So there usually actually is some strength here heading into late November, and then finally late December. So that also ties a bit with with this time cycle patterns. However, you can see that from December into late January, the seasonality is very weak for jets. So to the left here, over the last 5 years, November is the strongest month, but you can see here that December is significantly weaker, and on average we have a 2% loss. Over the last 8 years, November is the strongest of all months, and we are still certainly in November. December closes higher 71% of the time, but on average, it actually is flat. And then January is pretty weak. Given that we are still in November, I will give the bulls a 5 here on seasonality. But the issue for the bulls is that we have already seen substantial strength in November. So there's a risk that we got the strength early. Let's look at some fundamentals. When we look here at performance, comparing the Airlines ETF, JETS, versus the XLI, which is the industrial ETF. Year to date, JETS is substantially underperforming XLI, -12, -4.7, versus -4.7. On the holdings, 50 versus 74, so pretty similar in terms of the number of holdings here. The vast majority is transportation for the jets, not a huge shock here. Transportation is 20% here for the XLI. very dominated by large caps, really both, but there's more diversification in jets, very dominated by America. If we go back here to performance, we can have a bit of a look also at the beta. A bit lower beta here for XLI. The PE ratio is substantially smaller for the airlines. The yield is still very poor, basically no yield, versus 1.23% for the XLI. All in all, I do think that the fundamentals here were not that good, but not terrible either. But I give the bears a -3 here on the fundamentals. Next, we look at relative performance. Long term, there is a 23% positive correlation with the S&P 500, 43% with XLI Industrials ETF, -44% with the dollar index, and -2% with the 10-year yield. Short term, on the daily data points, 86% with S&P 500, 81% positive correlation with XLI, -80% with the dollar index, and -60% here with the 10-year yield. So the strongest correlation we do get is, unsurprisingly, with the XLI. So let's have a bit of a quick analysis of the XLI. So we have seen a very strong rally now, but we have now gone all the way up to what is all very likely going to be a resistance here, 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 and here. So sort of like the easy gains have most likely been made. It is of course fully possible to get the breakout. It's just that we have had a very easy move now. So the road going forward is likely going to be more rocky. On the daily data points, similar thing. I do see some time cycles here, so let's measure a bit. Yeah, they seem to differ a bit in duration, but this is one of those securities that moves in a time cycle pattern. On the weekly data points, we are not. Well, we are overbought versus the previous high here, though. Yeah, on the daily data points, yeah, we were a bit higher on RSI the previous time, but we are definitively in a territory that is risky for the bulls. Looking at the 20, 50-day PPO here, we are at levels that previously have been fail levels. Like back here in 2020. Back here, this was a level where we did have some pullback. Okay, so here we are comparing Jets with the XLI. Jets, it's certainly been underperforming the industrials. Substantially, this is at a very low level. There might be something a bit rounding bottom-ish in development, but given that we recently made a new low here, it's not that easy to call whether the low of that potential rounding bottom has formed or not. When we look here at the seasonality, yeah, that's pretty bad. We usually see some strength there into late November for the Jets, but then it just completely falls apart versus the XLI. I said that's definitively a bit of an issue. Let's quickly look at the XLI versus the S&P 500. Recently seen very substantial outperformance here from the industrials, but looking at RSI, we got very overbought though. So some of the performance here from the XLI stocks has also been related to the conflict in Eastern Europe. As such, given that there's been setbacks here from the bear country, there is the likelihood that some of the froth in the defense stocks will be cleaned out, and that would be bearish for the XLI. Looking at the seasonality, we usually see some outperformance here into early January, but then it falls apart. I think I will give the bears a -3 here on relative performance. As we saw, we usually see a more substantial bearishness later into the year. But all in all, we do end up with a -2 here for the airlines ETF. The key entry signal is 200, the daily moving average, and RSI resistance. So we have some time left. So let's run through some of the stocks within the JETS ETF. We start with United Airlines Holdings. Yeah. Weekly data points on the topic of resistance levels. We are seeing rejection now from the blue 100-week moving average here. The problem is that if you look back here, you see that this stock has a very noisy relationship with that indicator. So it is an indicator to be aware of, but it's not that tradable when you see how it has been sliced and diced in the past. But there was a surgical connection with it this week, but not, yeah, it's messy. Yeah, on the daily data points, we recently had a breakout above the 200-day moving average. So this is one of those situations where it's noisy. We are a bit at a fail level here on the weekly data points, on the RSI, and we got rather overbought on the daily RSI. Yeah, this is not a clean setup. Is it? Oops. So here is Delta Airlines, the next on the list. In this case, we are at resistance. Green 50-week moving average, and in this case it is a more clean resistance level. There's been more interactions where it stops at it, but you see that there's been quite a few times where we were above it, so it's all about the closing price. On the daily data points, yeah, so in this case we have broken out above the red 200-day moving average. Resistance on weeklies, breakout on the dailies. Looking at RSI, we are not yet in the super danger territory here on the RSI. We could go a bit higher. The same thing with the daily data points. So there could be more fuel left in this rally here from the bulls. In that case, they could actually have a bit of a solid adventure above the 200 daily moving average. Next is American Airlines, AAL. Here are the weekly data points. I've been in a very, very, very substantial downtrend, so it's definitively one of those stocks where it makes sense to look for value. Yeah, we have recently seen a breakout above the purple 20-week moving average. We have been up now 6 weeks in a row. If you look at the history of this stock, it usually doesn't stay up for that long in a row. You can see here as an example, you had these clear time cycles, up, down, up, down, up, down, up, down. So this is one of those stocks you buy on a pullback. Yeah, currently on the daily data points, we are approaching the 200 daily moving average, which is a key resistance level. Let's look a bit at on RSI and the PPOs. Yeah, we are a bit in treacherous territory on RSI and the PPOs. The purple PPO here. On the daily data points, we are not yet like overbought, but we are approaching a level that usually makes it difficult to attract more bulls. So we have been up 6 weeks in a row. There could be a bit more left here as well, but it's one of those situations where we have already seen a big bull move. So we looked at the JETS ETF, and then we looked at some of the components of the ETF. And given that there was an overall bearish thesis for the ETF, and we see that multiple of these stocks, they have seen big rallies and are approaching levels that usually makes it more difficult to get more buyers. It's not a value level anymore. So it sort of corroborates the ETF analysis. So yeah, To get more data, you can go to diamondarm.com. There's now this market reports, seasonality reports. So there's tremendous value on that VIP access platform.